Okay, hello and welcome everyone. Welcome to today's webinar. Great to see you all. First up, can I just get a quick sound check? Make sure everyone can hear me okay. Let me know where you're tuning in from. Awesome opportunities to connect with you guys. Again, some of you past clients, some of you clients, some of you friends, families here today as well, which is awesome. Awesome. We've got Brisbane, New Zealand, Australia. I know my brothers in Crete, UK. Phenomenal. Melbourne, Brizzo. Excellent. Well, Andreas is in Bali. So am I, Andreas. So we'll have to catch up. Awesome. Great to see you all. Thanks for letting me know the sound's working okay. And yeah, a special one for me. This is the first time since after Magnetic, just doing a webinar on my own. Obviously, I've been doing some stuff with Go Markets. There's been a lot of stuff going into the Telegram channels. And of course, with my good friend Mike every week on the Next Bar, where I hope you guys have been benefiting from the information coming in. Now, we're at a pretty interesting point of the year, and through the webinar, I want to be sharing with you a bit about September. And actually, I'm just going to turn off the cam so I can focus on the other screen. So yeah, so we're going to focus today on seasonality and the stock market in September. It can be an interesting time of the year, which we'll go into through the presentation. Also, I want to share with you a really simple strategy of seasonal switching, taking advantage of the best 6 to 8 months of the year where you buy and selling out during the worst 4 to 6 months of the year. And we'll have a look at how that plays out to your profits over time. It'll be quite illuminating. Let's have a look at the factors this month as well of, no September is always the same. What's happening this September? I don't want to focus too much on the macro because I do that with Mike in the next bar, but we will certainly have to have a look at that. And we'll have a look at the performance in September over the last 5 years, just to give you a kind of an understanding of what happens and seeing what can happen during that sort of May to September, October period, and what's happened in the last 5 years. I'll be telling you for no cost where I'll be looking to enter the market in some of my chosen assets like Tesla, Bitcoin, and the NASDAQ. We'll have a look at the charts. And I'd like to give you a bit of an overview of what's been happening since I've been in my sort of solo seat and running the service. I didn't really want to do a webinar like this until I'd kind of got a really good hand on what I was doing after Magnetic. And I'm pleasantly surprised to sort of show you what's going on and give you an opportunity to also be part of the community and join me in Bangkok next month, where I'll be holding a very small mastermind on investments. So thanks for all of the notes. Really great to see you all. All right, let's get into it. Okay, so what we're looking at here is a table of all of the major stock markets around the world. So S&P 500, NASDAQ, Dow Jones, DAX, Euro Stocks. DAX is German, Euro Stocks is also based in Frankfurt, but deals with stocks around Europe, of course. FTSE in London and the Nikkei in Germany. So these are pretty much rough and tough the major stock markets around the world. And what we're looking at in the table is 1 to 12 months of the year, being January to December, and averagely how much the average return by month over the last 50 years. So we're looking at quite a large time horizon. And I want you guys to tell me if you can see any patterns in the chart at all. There's one quite startling pattern in there, but it'd be interesting to see if you guys can see any patterns that kind of crop up to you. if you're just looking at that, going, well, which ones are more positive, which ones are more negative? And yeah, everyone seems to get it. So what's really quite stand out is September, where we're at the moment, is a negative month averagely over 50 years. So appreciate the number's not huge. It's most of them less than 1%, but averagely this month is down. And what we can see moving into October, green, October, November, December, and then pretty much rough and tough, the first 4 months of the year are positive. And then once we get into May, things seem to be less clear. Certainly Euro stocks pretty much negative all the way through, Nikkei negative all the way through. Only one that really holds up is the NASDAQ. So, there's the old adage, sell in May and go away. Well, does that still ring true? I don't think it rings true in isolation, but with adding a few more dials on the dashboard and looking at a few things, it can be interesting how that plays out through the summer, which is typically what we can see here, very quiet months, and then moving down into a potential correction in the September-October region, and then into the really strong months, really from November to April. So that can be very simply put as our 6-month split from kind of November strong to April, and then May to October weak, but looking to definitely start picking up in potentially October. So it's great information, but like all information, how do we sort of make some use of it, and how do we dig into it a little bit more? So I thought I'd do a little bit of digging for you. And if we look at the last 50 years, there's 30 times the market has actually gone into a 10% decline, which we would categorize as a correction. And this is in the S&P 500, Dow Jones, and the NASDAQ. These are the American stock exchanges. Sorry, I will do a little bit simplify a few things, because I know there's a few people in the audience that are not maybe like the majority of sort of investors and traders, but these are the core American markets. Of course, there's the Russell as well. American markets really consist, it's probably higher than this for now, but they really consist about 65% of the global markets are in the US, right? So that's why my main focus is in the US. One single stock, Nvidia, is larger, if we go back, is larger than the DAX, larger than Eurostoxx, larger than the FTSE. I think maybe somebody might know out there. I'm not sure if it's larger than Nikkei, but I think it's very, very close to, if not larger. So huge market caps through these markets. So that's why I tend to focus on the NASDAQ. But anyway, back to the story of 30 declines, which are represented or categorized as a 10% correction. So this has really happened 60% of the time between May and October across these markets. Now, if we look at the NASDAQ, which is my chosen market, which is the tech market, and if you look at the Magnificent Seven, or the largest companies in the world, if you look at the market cap of the largest companies in the world, you'll find that majority of them are tech companies. So very, very high weighting in that market. And we've seen 33 corrections. So 67% of the time, we will see a 10% correction since 1975 in the market. And we'll look at some of those examples. 1975, before I was born, and actually before the NASDAQ was around, I believe, we had a 12%, 15% in 87, pre-Black Monday. But notice how we've had a 20% correction in the NASDAQ. Seems to normally flow a little bit more. 1990, 19% in the overall market, and 25% due to the Gulf War. 2000, 15%, and a 50%. That's not a correction. Anything over 20% is classed as a bear correction. So anything, if the market goes down more than 20%, we're into technically a bear market. So the dot-com bubble burst in 2000, a 50% decline in the NASDAQ. 2018, more or less a 20% for the NASDAQ. In 2022, 10% and a 33%. We're actually looking at that. I'm not sure if it was quite as high as that 33%, but we certainly did get a larger decline in 2022, which I remember trading. Okay, so averagely we get about a 14% decline. Now here's the interesting part. During those during a 3-month period, during May to October, right? Now here's the important part. Averagely, we recover within 4 months, and the NASDAQ can recover a lot quicker. If you guys have been following along in Telegram since I started in April, I've been pretty vocal about this of, we really want to be getting in when there's blood on the street and when we're seeing these big declines in the market. And I showed you what the effects were. And if you haven't watched that, go to YouTube. I think it's there. It was the Go Markets presentation where I went over how quickly we come back from all of these Gulf War situations or these sort of disastrous situations where the market just absolutely tanks. Everybody's basically, for want of a better word, shitting themselves, and that's the time for us to get in the market. Get into the market when there's blood in the street. And I like the next part, which I've told all of you, which is latterly not as well known as even when that's your own. And certainly in April this year, I had a massive amount of blood on the street when Tariffgate hit in early April. Okay, so that's the key thing to take from there is these downturns, they recover generally quite fast. We'll look at some examples of that. And some of the drivers can be that, yeah, there's lower volatility in the summer. We've seen that this year, that the markets have not moved so much, the September effect, which we have the corrections. We've got, Fed announcements and so on, and also geopolitical things happening in the market. Now, when we look at the recent trend over the last 10 years, we've got 4 to 6 corrections. But if we look at the NASDAQ again, my chosen market, 6 times in the last sort of 15 years of a minus 10% move. Now, what I do know, and what I thought I would research as well, is often we don't quite see a 10% move. We see something slightly less than that. Diane's just saying sounds in and out a bit. Are we okay, guys? Maybe just give me a shout on that one. It might be localized. Sound fine. It looks fine my end. Okay, so it might be localized to you guys. Okay, just give me a shout if sound goes. I'm in Bali Island, where things seem to. We just had a storm last night. Yeah, pretty big storm. So if things go out, let me know. Okay, so with my experience, I know that sometimes we don't get a 10% correction in the market. Sometimes it's a lot smaller. So I thought I'd add in a bit of research of what if we get a 5%, what we would categorize as a pullback. So we'd categorize a 5% move as a pullback, 10% would be a correction, 20% would be into bear market territory. And what we can find, without going into the numbers too much very quickly, is 75% of the time since 1975, the market has had a pullback in the market between May and October, and they're more likely typically to happen in the last 2 months, which is September and October, which is exactly where we're at the moment, and they recover within 3 months, and often they can recover even faster. Thanks, guys, for letting me know. I've got a mixed bag of sound is good and no sound. So I'll go with the majority, which is sound is good. Okay, all right. So I want to show you this really simple, almost too easy strategy, which is based on the data that we've kind of had a look at, and simply just investing in, I would say, markets like this one is the example of the Dow Jones. You could do this in the S&P 500. You could do this in the NASDAQ as well. Just switching between maybe buying an ETF, and an ETF is an exchange traded fund. You could buy a Dow Jones ETF, which would give you an allocation to every stock, every 30 stock that's in that market for a very small fee. And you could simply sell it in May, or rather buy it in October when the MACD turns green. And when the MACD turns red on a daily chart after May, you sell. And that's all you do. And if we look at the last, this is actually over the last 75 years, you would have actually, from a buy and hold perspective, you would have made 2.1 million. And if you were to do the seasonal switching, you would have almost doubled your return by just being out of the market during that period of where the market is potentially sideways or negative. Okay, so just take that into account. I definitely take this into account for the ETFs. I personally don't, for full disclosure, I don't invest in ETFs anymore. I used to in the past. I prefer trading in single stocks just because they're more volatile, but I appreciate not everybody likes that much volatility. And I do give guidance to the clients on ETFs. So let's just take a look at what has happened in the last kind of 5 years in the market. So what we can see here last year in July, when I was in Scotland, we had a decline here of 15%. And I'm just using the NASDAQ because that's kind of my chosen market. We had a decline there of 15%, which we bought into within the investment group. I want to also highlight this blue line. This blue line, you can't see it here, but note it down. This blue line is called the MA 200. It is the average price of the market over the last 200 days. And it is one definite meter you want to have on your dashboard, that often we can see a reaction coming off that level. So it's a 200-day moving average. This is a daily chart. Again, apologies guys for me simplifying things. I just know there's some people in the audience that might not fully get all of the technicals. So each candle here represents a day. If it's red, it was down. If it was green, it was up. And this here is the average price over the last 200 days. This red line here is the average price over the last 50 days. So these are often looked at by institutes, retail traders, and can react. Another line for a great tip for you is to put on your chart, if you're looking at investing, is put the weekly 200 moving average, and you'll often see the market, certainly in stocks, coming off that level. So what we saw was a 15% decline, a bounce, and then into September, we saw another 7% come off. So that was what I was saying here, is that we might get smaller dips often that precede or follow some major corrections, which we've already seen. That's exactly what happened last year. We bought in around here. I don't think we bought in again here. I think we waited for Trumpgate to get in a little bit further. Okay, so that was 2024. And just as a point here, guys, it's always good if someone floats an idea to you, you know, like I have, just go back in the charts and just get a feel of kind of what's happening. You could go back 20 years and just get a feel of what's going on, because when we're looking at the high level data, what we're seeing is, you know, very small percentage drops in the market. And also, I think what's worth to note here, sorry, I'm moving around a bit. What's worth noting about these numbers is this is the month in total. So from start to finish, this is what happened. Doesn't tell you what happened in the middle of the month. Could have gone down 10% and jumped 10% in the month. So just sort of take those things into account as well. And it's always good to look at what's really going on in the market, look what you're trading or certainly investing in. Okay, let's look at 2023. July, we just had sort of lower dips, 8%, 7%, and 8% here. Look at our blue line. We dropped 11% overall, so not bad here. And we can actually see that recovery coming in. That recovery from these highs in July came in July, August, September, October, November. It was back in, yeah, it was back in by November. By the way, guys, if you do have questions along the way, just ask me. Now, this was the 2022, which was definitely a deeper correction in the market. We had a bear market correction. I thought I'd written when that came back, but I think that one, unless it's the next slide. Okay, it's the next slide. That one will have come back in 4 months. But a great opportunity. And this is the opportunity, if you think about it, just to get into the market. And if you say that, you know, this is averagely going to return in 4 months, or even if it doesn't, even if it returns in 6 months, and you catch somewhere near the bottom here, I think actually this year we caught here, and then we actually had to add. This is the end of October. We were in here in September, and then added here. You know, you could catch a 20% move, and that might be all you need to do for the year. And that's it. I mean, that's absolutely massive to catch some kind of move like that. And you'll see the move that we caught earlier this year later. Okay. Then the last one, I think we were a little bit out of order there. Yeah, sorry, I think this did recover in 7 months. This is me obviously having sort of brain freeze this morning. But back into 2020, we saw quite a sharp 14% move in September to the end of September here, 25th, and pretty much recovered more or less 90% of that move within a month. So if you think that upside, if there's a downside of 14%, there's an upside of, you know, high, you know, almost 20% to the upside there. So that is just a bit of an example of how this can play out in the market for over, you know, certainly over the last 50 years, but certainly just having a look over the last 5 years and giving you some examples and a bit of a feel. So that is what I will be looking out for this September. Does it need to happen? Not necessarily. I mean, if we look back to 2024, we only had a 7%, but we'd already had a 15%. One thing that I do think at the moment is we've had almost, I think it was about a 30% correction on tariff gate. So will we see as big a dip in the market this year? I don't anticipate it. And also, it doesn't need to happen as well. These examples, we've always seen some kind of correction, but it doesn't need to necessarily happen. So what are we looking at this year, which is potentially slightly different? Well, I think this year, as we know, on the meal card, if you like, the whole year has been about tariffs and rates. So there's a 91% chance that the rates in the US are going to be cut next week. Now, what we can say about that is that more likely than not, that is priced into the marketplace already. As we're seeing, you know, new highs forming in the American markets. Markets again are up today. They're pricing in a rate cut to happen. So very, very likely. Now, we've got to ask ourselves, when that rate cut comes in, are we going to see the market move higher, or will we see a massive spike up and the market decline? It could be, I'm not saying it will be, but I'm thinking it could be a sell the news event, that this could be a catalyst. We're always going to have some kind of catalyst for the market to go into a correction or a downturn. So I'm just watching that. It's very guaranteed that will happen. But could Powell say something on the call that spooks the market, spikes it, and it goes down? Because if this is priced in, really what we're going to be looking at next week is, well, what's going to happen in October? What's going to happen in December? Are we going to see further rate cuts coming in? Which, if we do, obviously they're going to fuel the market. So that's what the market's going to be looking at. I certainly will be watching that event and just seeing what can happen. We've got, I'm not going to go into all of the massive detail here, and I will give you the slides at the end. But you know, we've had this continuing tariff threat. It's been the narrative since April. I think the noise from it, like other events, you know, if you think about what went on with the Ukraine-Russia war, you know, the news that comes out has less and less and less effect of the market as the market's priced it in and sort of thought through where we're going to be. A market is a future pricing index. A market really looks out, normally is pricing in what's going to be happening in 6 months. That's why, actually, just if you look at that overall, the last one of a sort of a global recession, what you normally find is, actually, once recession is actually announced, which we're not sure it's going to happen now in the US, certainly according to the betting sites, the Kalshis of the world, you normally find that the markets, that's the time it's going to take off. It already priced in the recession, and now it's coming out. But we definitely have some threats in there from China. India was kicking off. Mexico is kind of still on the table. So some of that could come into the market, and we definitely need to be aware of that, and also the fact that it's going up to the Supreme Court about the tariffs, if they were actually legal or not, which apparently they're deemed not to be. So, you know, that could be, if it didn't get through that could be pretty catastrophic, and some refunds going on there. But this is definitely on my watch at the moment, and we'll just see how the market plays out. Will there be a recording? Yes. Cam, do you know extreme moves over these periods? Where is your entry and why? Okay, let me come on to that. What's my signal? Okay, I'll give you some. Hang on, that there's no sound, but just let me know again if there's sound. Will we know when the tariffs come in for China? I think, again, just off the top of my head, I didn't want to focus too much on macro, because I do macro Mike next week. But I believe there is a meeting in Korea towards the end of October where I think it's really highlighted that they'll sort of iron out everything that's going on with China. I think it's been pretty good moving forward. But yeah, look, it's okay. Sounds great. Thanks, guys. But yeah, I mean, we just have to be, you know, you got a guy with orange hair, you know, just it can go any way. And actually, it's been very smooth recently. It was interesting talking to Mike last time, that you know, I was like, well, there's not a lot of news, and we sort of got into being used to there being so much news caused by Trump, and it seems to have calmed down. Okay, sounds good in the UK. Oh, great. Okay, so let's look at my charts and give you an idea of what I'm looking at this year. Now, I will premise this. I am not giving you a signal here. This is not a buy order. Please do your own research. Please, you know, look at these levels. But this is what I'm looking at this stage, looking into the future. When price gets there, I will be analyzing what's happening with Trump, what's going on in the world, what's happening with price action, where are we at in the stage of the year, and so on and so forth. So I will do that analysis. So definitely these are not signals to get into the market, but these are where I'd be looking to potentially get into the market. So here's the NASDAQ on the daily. What we can see is we're pretty much at all-time highs. We've had this massive run up with very little pullback. And also, look, to demonstrate to you guys that February, right, down. Okay, let's measure it. Okay, so from this peak in February, drop 24%. Okay, from the 7th of April, because I remember that, because that's the day I bought, because it's my birthday and I took the whole day. Birthday was cancelled that day, as you know. So 7th of April to 10th of June, call it 7th of June. April, May, June, 2 months the market recovered. That's how quickly it can happen. And that is how you cannot sit on the side saying, yeah, I'll just see how it goes. Cannot. When you see stuff like that, you need to start getting into the market. It's not potential. It could go potentially lower, but you need to start adding something in the market. I've just seen too many times people have just, oh yeah, I'll sit on the side, I'll wait and see what happens. By the time you've waited, it's gone. It's over. And a lot of Wall Street got caught off guard this year. Anyway, let's go into this. So we're on kind of all-time highs. Now, here's our MA 200. Actually, just as a side note, because this is my chart, this is where we bought. So we're sort of, I think, about 40% at the moment, up on 40% since April. Since that April buy, 40% up in 4 months. So phenomenal. Now, if we have a look where our MA 200 is, I've got support here at 2,700. I've got an MA 200 at 21,400. If I have a look also at where the point of control is in the market, which is just basically where the most amount of volume has run through in this market since April, it's around here, 21,300. There's a lot lining up. If the MA 200, sort of the point of control, which is around kind of that level, and we've got an 11%-ish, 10%, 11% drop in this area, so call it note it down, about 21,500 to 21,200, I'd be looking to get into the market around this area here. Again, it's not a signal, but that's kind of what I'd be looking at for a pullback. See what the price action is around this MA 200. Also a little bit more technical, but there is a yearly VWAP here as well, which is the volume weighted average around that area. Again, this is a daily chart. That's where I'd be looking to get in, and we'll deal with the fact if it doesn't get there in a second also. So do we see this market do some kind of double top, spike out, and then start to drop? That could be a potential. And also, for those of you that are a bit more technical, we could potentially say this is RSI, there'll be RSI divergence there as well. Okay. Let's look at my favorite stock, Tesla. Again, a little bit more technical here. What we can see is we've had this decline. Here was the April 7th buy. We bought at 215. It ran up all the way up to 3 65, hit what is resistance, came down, and you can see I've made this channel here. So now we've actually came up and we've formed what I would call a wedge. So we're getting a high here, a low, a lower high, a higher low, a lower high, higher low, and the market is just condensing, and then it breaks out. So it's broken out into this channel here, it's pushed up to this high, came back, retested the wedge, gone back up to the top of the channel, came back, and now it's just hit the top of the channel. So let's rewind a little bit, because I know I told you guys to buy, and I hope you did. Tell me if you did. I told you in whenever May to buy 290, and I then said, look, I'm buying 315 and 290. Let me know if you bought into that. That was outside my service, just for you guys in Telegram. If you have, we haven't, and my profit target here was 395. Still is, although I've got some short-term trades at the moment. I'm looking to get to about 365. All right, so that covers what's kind of gone on. We can see that we're in a breakout situation. If we look at these lows, we're having consistently higher lows and higher highs, meaning we are now technically in an uptrend. At the moment, you'll see very clearly on the chart that I've got a buy level around 300. So that stands for me at the moment. My buy level is 300, but I think anything from I think anything from 330, guys, to 290 in Tesla, if your outlook is, you know, long enough, i.e. a year or so, I think there's no issue getting in at those levels. Again, I'm gonna have to look. So Dave's question was, what is your buy signal? You know, I need to see that at the time. It may be something like this, where it's coming to the bottom of the trend. You know, and I see a bit of positive in the market. I might be getting in from those levels. Sometimes it is very macro driven. There's a lot of news out. There's a lot of news out on Tesla. Certainly with Elon in the past being political, but we got a million opportunities to get into longs. Okay, great. A lot of people got in. John got in. Martin got in. Johnny got in around 300. Awesome. And Ghana, who's my old friend, has been trading it multiple times, which is excellent. I've almost run out of entering into the market. I did get a little bit out the other night. But yeah, I've still got a little bit of gunpowder to get back in, but I entered so many times into this, and I think the stock's going to be unbelievable. But that's a story for another day. Okay, guys, into my last one. We'll have a look at the Bitcoin chart as well. A little bit more simple Bitcoin. Again, back in May, I said to you guys that my profit target, I gave you my profit target was 126K. You know, again, these are levels that I'm predicting into the future. When we get into those kind of levels, then I'll start to look at it. So I took my first, in full disclosure again, took my first ever profits in Bitcoin since I started buying with a lot of you back 5 years ago at the 22 level. I still think we can get up to 25, although I think it's going to be higher. I think now I'm looking at sort of 140,000 with what's going on in the market. And again, where I'd be looking to buy, we had this push up. We pushed down to pretty solid levels at the moment. If you look around, most analysts are giving you, look, 110 is the level at the moment. That's what needs to hold for the market to go higher. I agree, but we do need to see 113 break for it to move. Not sure if we'll see that or not. And actually, I think the buys, the good buys are lower, down towards the 104 to about 98 levels. So if you get into those levels again, just to highlight, there's the MA 200 at 101. another interesting fact for you all is that since April here, well, if we look at the 200-day moving average, it's over 100. So it's quite a statement to say that for over 200 days, the average price in Bitcoin has been 101,000. If you told me that a few years ago, I'd be pretty impressed. I'm still fairly impressed. So again, note that down, guys. That will be roughly what I'm looking at. Again, it's not a buy order or anything like that. I'll look at the time, and within the community, I'll be letting the guys know where I'm getting in. I've taken only a small portion out of the market at the moment, just 10%, because I do think that we'll potentially push higher into the end of the year, and potentially into next year as well. So just a quick recap. I know I gave this before, but just to give you a recap of what my playbook is and what I'm involved in the markets, or what my focus is. My focus is predominantly investing these days and short-term investment trades. I still use a little bit of leverage, although I'm going to warn you that you just be careful with leverage. I still trade a bit of leverage in the DAX and the NASDAQ at extreme levels, but mainly I'm non-leveraged in Bitcoin through the BlackRock ETF. MicroStrategy, Cantor Fitzgerald, I use that for sort of Bitcoin proxies that can give you a little slightly higher return than Bitcoin. It hasn't been recently, but it definitely has done over time. I'm involved in Solana, Tesla, and Nvidia. This is really the core of my portfolio. I do have some other stocks that I'll tell you about, but 80% of my portfolio is all about investing, longer term horizon, 1 to 3 years, where I will rotate out of those positions. Like I've said, I've taken 10%, I'm going to get in a little bit lower, taken a bit of Tesla out, I'm going to get in a little bit lower, hopefully, taking a bit of Solana out, I'm going to get in a little bit lower. And 20% of my account is really involved with shorter term, non-leveraged trading, where I'll take advantage of moves in markets, and I'll get in and out of these assets in days to 2 weeks. So I'll place the trade, I'll get in, and I'll maybe get out in a couple of days or a couple of weeks. And this is really to sort of generate cash flow for me. That my 20% is kind of my income, hopefully a little bit more that I put back into the investment side, as the investment side just sort of grows and is my sort of pension. I want to just highlight this, highlighted this again in May, and it was a big lesson for me, really, because of, you know, the first 10 years of my sort of trading investing career was really focused on short-term trading. And a lot of you know that I was really heavily involved with trading the DAX and NASDAQ for the first 2 hours of the European Open. And my whole focus at that time was just to have a larger and larger account, make about 3 to 5% a month, and I'd be happy. And that was my kind of focus, of just make money. But the problem about just making money is that it is just then ends up in money, and you've got to do something with that money. You've got to get invested, and those investments, you know, I'm a bit late to the party, will just make you more money than you can ever make straight trading. Not that we don't need money from trading. We need money from trading. I need money from trading because I need money to live. I need to pay the bills and expenses and so on. But it does have some limitations, just trading as well, of size, and also psychology of how much you can actually trade. I definitely hit some limitations of how much I'm willing to lose on the day, or how much you're willing to sort of make or let trades run. But the really good news for you guys is that although I'm not saying it's a mistake, I think it was just part of the journey. The good news is you don't really need a very big account if you are going to be involved with leverage trading, which I know a lot of you are. Typically these days I have about 3 to 5% of my overall portfolio in leverage, and it's only enough just to cover the margin for a trade. So what does that mean? It means if I'm going to risk $500 on a trade, $1,000 on a trade, $2,000 on a trade, I only need that much. I only need that much margin to take a trade. So this is a little bit outside the investment stuff today, but I just wanted to emphasize it for you guys of like, make sure that, you know, if you're stuck in the trading game, trying to, you know, make sure you're putting some into investments and it's just going to grow by themselves. And as my dear old mother said to me, you'll never make or you can never really make as much as you could ever believe you could make from investing. So I wanted to talk about debasement, but I give you one slide to emphasize debasement, and which ties into that part of having cash or trading for cash and holding cash and having a bigger account is actually not invested. Is that, you know, if we look in 2020, $100 spending value today is $76, and if you had your money in Bitcoin, it's 15x that since just 2020. So just be careful about holding money or holding fiat. You've got to hold some for sure for expenses. You've got to hold some for opportunities in the market. You've got to hold some for some trades. But beyond that, I don't particularly these days hold a lot of cash, and hence why I've got my 20% is kind of rotating, making me money, and actually there's cash there if I should need it. So just take that away, you know, back to that, you know, doing nothing over those 5 years, and I appreciate those 5 years were pretty extreme 5 years, but 15x in 5 years, incredible. Let me just take a quick look at the questions. What's your view on MSTR? Can I take that at the end? Gunnar. Yeah, hey George. Yeah, so Diane's just saying day trading takes too much of my time. Okay, I'll come back to Solana at the end. Okay, so if you will indulge me for a little bit, I just wanted to give you a little bit of an update of what's been happening since I started afresh after Magnetic and the clients that moved over in the investment program, what we've been doing and what we've been resulting. Again, remember, this is 80% of my portfolio. In Tesla, I've taken 4 entries. These are running profits. We're at 35%. Nvidia, I've taken 1 entry. I'm at 95% return in those 4 months. I've sold 10% of that. Bitcoin, we had 1 entry. Is 45% return with 10% taken. I did take that 10% and I moved it into Tesla at that stage. And just yesterday, I closed those Tesla positions. So we would have lost 8%, not lost, but unrealized. The market moved down 8% in Bitcoin, but we gained by just rotating that profit. We rotated that profit into Tesla and I closed it out yesterday for 11%. Solana is a whopping 116% in 4 months. We've sold 20%. NASDAQ, the QQQ, 42%. SPY, S&P 500, 33%, and the DAX, 21%. Of these, I've sold 50%, just in anticipation of the seasonal rotation. So again, in full disclosure, I don't hold these, although I would look to trade them on perhaps a futures contract or perhaps an option, but I'm not looking to deploy capital into them because I'm looking for, I don't want to say I'm necessarily looking for these kind of returns, but we can achieve potentially these kind of returns in the market from single stocks. Again, in full disclosure, I've got a very small portion of the portfolio, 3.5%. So this is 96%, plus there'll be a bit of cash in here as well, is at these levels. And I've got some Bitcoin and Solana proxies, which are down, extremely volatile assets they are. So just be careful with the proxies. Down 23% as we stand, to expect that to come back. So that's where we're at with the investment side. The short-term trading side, which is non-leveraged trading, I've taken 5 positions in Solana, 53% return, 8 positions in SUI, 31% return, say 2 positions, 30% return, Bitcoin, 3 positions I've taken and a moderate 10%. Tesla, I've got 2 positions at the moment, which are running at 15% for the short term. And again, MSTR, in full disclosure, I've got 1 of them running at a negative of 4%. But this is really where I get my cash flow from. So if you kind of added that up, you know, you would, over those 4 months, you'd be over 100% return on whatever you kind of allocated into those shorter term trades. So again, that's what I've put out, but what has happened to my own account over that period? Well, we start April 5th, and during that period in 4 months, my return has been $1 million, 30%. But it's kind of, you know, like everything with snapshots, they don't tell you the full story, because actually the full story is that the market dropped a lot before that. So this is me being coming out of that hole. But I started this record when we started the investment program with Magnetic, which was back in July 2023. I trade on various amounts of accounts, from Interactive Brokers to Go Markets to IG and various other brokers or crypto exchanges. So this aggregates everything for me. So during that period, just a little over 2 years, 165%, 2.7 million during that period. And again, I don't show you this to really impress you. It's not for that. It's more just to give you proof of concept, to say that, look, everything that has been given here is live. I put it live into the market. I put it when I'm entering. I tell you exactly where I'm exiting, and just to show you that, you know, it's not bullshit. There's money behind this, and there is returns being made. So really more proof of concept than to try and impress. So the service at the moment, just if you're interested, it comprises of a Discord channel where I give all of the investments in really, really clear terms, a long-term trading channel. This was one of the updates from the other day. It'll tell you what I'm doing. I'm selling 50% of a position. It's a short-term position. This is exactly the price I'm selling at, and this is how much we've got running in the position, and this is how much we took, because we were averaged at this kind of price. So I deliver those. That channel is completely dedicated just for trades. There's no other noise in there. I run a news feed really for anything that is pertinent to our investments. There's a lot of noise out there. I digest a lot of news every day, but I just try and keep it to what is really relevant, or what is really affecting our stocks. So I know we're all really, really busy. So you just want to be taking into account, or not, what's going on day to day. The short-term trade channel as well comprises of all of my sort of short-term investments, plus the DAX, plus the NASDAQ, Bitcoin, Solana, SUI, and SEI. I do a daily report of where I'm looking to get into the market. You can see here, I think this is yesterday's, where I'm looking to get into the market in the DAX, in the NASDAQ, also where I'm looking to potentially get into the market on the crypto markets as well. Then Andreas is here in the room. There's a little Q&A room. If you guys have got a question, you can pop it to me, and I will get back to you as soon as I can. I run a weekly webinar as well, where I just basically go over everything that's happened in the week with the portfolio, or any relevant news that's happened, and then I pull all that together and put it into a summary and fire it out to you. in the light of, I know how busy people are, and although I post everything on Discord, just in case you've missed something in the week, I call this the 5-minute investor, and it gives you every asset we're involved in, what's our allocation. I've blacked that out just because in respect of the guys that are paying for the service. What's our current allocation? What's the next level to get in the market if you're not up to date with the current allocation? That's DCA, dollar cost average, and where our next profit target is, and what actions we've taken in the week. So if you've got 5 minutes a week, that's all you need to do. Go, okay, these are the actions that were taken the last week. Great. Actually, I'm not as fully allocated as Cam. I need to get these DCA levels, and if it goes to those levels, I'm going to get in. And some of the charts that you've seen, I give you all of my charts there as well. So all of the trades are also logged. I give you a full log of every single trade that's taken, so you know exactly where we're at, where we're averaged at, how much is running at any time. Just as I appreciate everybody's busy, there's a really simple way of doing that. So look, if you're interested in getting involved with the investment program, as I say, give you investment reports, live updates, newsfeed, charts, 5-minute investor, and so on. If you just want the investments, it's depending on where you are, it's in Aussie dollar, it's 2,500 or 1,100 pounds a year, or if in the US, 1,700. I will post these links in a second. And if you want the short, everything that's really basically within the investment program, and you want the short-term investment trades as well, it is 3,500 a year. If you are thinking, I know I've had inquiries before, this is the first time I've sold anything to you guys because I just wanted to get the service right. But I've had some inquiries before. If you are thinking, now is the time to get in, because we are coming into that season where I will start to be potentially deploying some trades on the investment side. We're always going to have the short-term trades running, and actually, if you're thinking about, maybe you don't have as much money, you can just run the short-term trades as well, and maybe flip it on its head to 80% short-term trades and 20% investing while you build up that bag. I'm also going to be doing an event for the guys in Bangkok, 25th and 26th of October, so next month. So if you do join, completely free, no additional cost, you can join quite an exclusive group. It's not going to be a lot of us. I think there'll be sort of 15 to 20 of us hanging out in Thailand, Bangkok, where I'll be able to go into the portfolio in a lot more depth and a lot more time with you guys, and give you a full roundup of what I'm expecting through Q4 and into next year. Great way to sort of come together, socialize. There'll be daily lunches and evening drinks and great conversations with like-minded people. We've been running these type of events over the years, and it's been great. I'm looking forward to seeing a number of you. So let me post these in to the chat. Go and find the chat. I'll post these links. Of course, if anyone wants to find me an email, you can do. I think you guys have got that. If you've got any questions, fire them in just now while I post these links for anyone that's interested. And if anyone's not in the free Telegram channel or getting my deep dive emails, here's a few links as well for you. And I'll get into some questions. I think Mike Smith's in the room. So Steve Slattery's asking, was Mike trading the open of the US? Mike, just let me know. I think Mike Smith's in the room here. So thanks. Oh, sorry, he said he's got to fly. He's got a webinar. Yes, he's got a webinar in 2 minutes. So yeah, I reckon he's probably on for that. There's a few questions about Solana. I'll come back to those. Is this webinar recorded? Yes. How do you trade SUI and Solana non-leveraged? Do you buy this through Coinbase, for example? Yes. I basically spot trade this. I don't buy this with any leverage, so it's not a CFD, it's not through Go Markets, it's not through IG Index or a Pepperstone or anything like that. I buy it through, at the moment, I buy it through Binance, or you could use Kraken. You could use Interactive Brokers as well, just to use a spot trade. Gunnar's asking, what's my view on MSTR? I think it's come off a lot. I think it will recover. You're entering again at 325 with a 6-month window. I think you're fine with that. Again, general advice, not financial advice. Diane's saying, can you just arrange for Bitcoin to get to its lows at a reasonable time for the UK? I will try, not 3 in the morning. It is the nature of crypto, and it's going to be the nature of the markets that the NASDAQ is going to move to being 24 hours a day, not too long. Anyway, day trading takes up too much time. Again, more questions about Solana, so I better do that. Okay, guys. If you've got to run. Simon's saying, okay, Simon. If you are having a problem with that, maybe just drop me a line at cameron@stonecapitalgroup.com.au, and I can get you into the list. Do you plan on doing the trading event annually? Yeah, we will do. I normally do an event through Magnetic. We did it annually, and was it last year? We had Tom Hugart came out. I think it was last year. Yeah, it was just COVID that we couldn't do it, but yeah, I plan on doing it yearly. Cool, guys. Thanks a lot. Okay, so if anyone has to run. If you've got any questions that you want to handle outside that, ping me an email. And I'd certainly hope to see a few of you in Bangkok. Let me just switch the screens. There's been a few requests for Solana, so let me see if I can pull my Solana chart. I'm still here, guys, just getting the Solana chart. Okay, all right. So look, Solana is at a really big level at the moment. At 2020, this is a profit target for me at the moment. So, can the market get through these levels? I'm not sure, to be honest. I would expect a retreat from these levels. However, there's a lot. Solana's very undervalued, and it has been undervalued for quite some time. And we do have ETFs looming. 8 ETFs coming into the market. We're seeing Ethereum decline. And could it be that some of that money's moving to Solana? Quite possibly. But the question is, okay, well, where would you start entering? If we could get a dip down to the 80 levels, 180 levels, I think that's where I've got support at the moment. If we got a lot further, then maybe 160. I'm not sure we'll get there, but it could be that we see down to there. So 180, 160 levels are probably what I'm looking at. at the moment for Solana, with the view that I think, well, again, I can say I'm always up for being wrong, but I don't see Solana in the short term getting through 230 before having a bit of a retreat. Let's see. But what I'm seeing on chain at the moment, I think it's going to be pretty difficult unless, you know, we start seeing these ETFs come out and then suddenly whoosh, this will be off. And I think easy 250s, 300 for Solana. So hopefully that helps you guys out. Hey, Michael. Yeah, great. Great to hear from you. Yeah, definitely check those dates. We'd love to see you in Thailand. You're more than welcome. It would be great to have you back. Thanks, Angie. Cool. You need to go. No problem. Okay. Interesting question from Gert. Do I recommend a minimum investable amount? It's always a question. It's always the number one question you used to get with trading. I think, you know, what and maybe I didn't explain this fully, but what I've tried to do these days with the services, it's not so much about, it is about me. Of course, I'm telling you where to get in, where to get out. But I've devised the service of it really to be a one size fits all, that you know, you can take the risk profile you want to take and also invest enough money that you want to invest in. So even just looking at the short-term trading investments, you could start with a very small amount of money doing that and maybe buying a small amount of the investment. So as I say, you could flip it on its head. So I mean, I think, you know, like everything, you know, how much do you need to start a business? You know, it can be from $500 to, you know, $5 million. But I think you should probably have at least $10,000 to get going, and then, you know, if you really want to be serious about investing, probably upwards 25, maybe $50,000. Question for tomorrow. Okay, yeah, I will cover that question tomorrow. Dan's actually in our group. Thanks, Andreas. How often do I do the deep dives? Yeah, just when they come along, when there's something really interesting. So when there's something a little bit more in depth than there is to put on Telegram, I'll stick it in as a bit of a deep dive. They're normally just too long. They're normally a bit of an essay, and I've just recently got the emails sort of working, so I'll stick stuff out there. Thanks, guys. I think that's it. I've gone a little bit longer than I anticipated, but thank you all for staying, and really great to connect with you all. The recording will be available. I'll send it out potentially later today or tomorrow. And yeah, if you guys have got any questions, just hit me up on the emails and we'll catch you through the channels. Cheers.